Good morning, and welcome to another edition of Roadhouse Live, the morning show that tells you about the morning, maybe some of the previous evening, and we might even predict what happens in the afternoon. Sonny, how are you, sir?
I'm good, my man. How are you?
We got the sun, man. I don't see no stonks.
No,
Don't see
Stonk's sleeping in today.
stonks. Bender is doing butt stuff, I think. I think that's what he's doing. I think he
Yeah,
is
that's what he said
deeply engaged at the moment.
in butt stuff.
Deeply engaged is what
Yeah.
I'm thinking here. So yeah, that's what we got. Um, so we get data, right?
Yeah.
And data is, how would one say data is?
I'd say data is bad,
Care to
but
expand?
they I mean it's going against what the Fed wanted, right? Unemployment is lower, uh, and they didn't want it. They wanted it around 4% by this time of the year.
So the counter to that
Wage
is
increase decreased,
wage
right?
increases decrease. So wages are coming down,
Yes,
which the market wants, but people have
which the market
jobs.
wants. Right.
So isn't it, wasn't it, and isn't it the Fed's concept, now just bear with me here, that the only way to get inflation down was via demand destruction? That was the only way, in their opinion, to, that was the whole concept of Oakler and all that fucking trash.
Hmm.
That was the only way to get inflation down, was people losing their jobs, no discretionary income, no anything, soup lines to where you can maybe get some bread and some murky water to drink or eat or whatever you want to call it. That's what the Fed was thinking, that's what had to happen in order to get inflation down after they completely bailed on their, overall concept that inflation was transitory. Isn't it funny how time proves out everything in a lot of ways? Like
Yeah.
time,
Time.
time. So conceptually, you could make the case that, yeah, no, inflation was transitory based on pandemic shenanigans and supply chain and, and all this. And yeah, no, there was extra money that was out there. And so that kind of, you combined, strong demand with weak supply, that's just a law of economics. Then you get supply back online and demand to cool because you only need so many washing machines, to be honest.
True.
Um, then what? Now what? Now here we are, right back to where we were with high rates, um, and a market that's performing pretty damn well. If you're willing to look past the fact that they've basically wiped off 2 years worth of market activity, but really looking at, at the end of the day, looking at something that was really nothing to really fret about, that this was all just manufactured chaos. So when I look at the data coming in strong as it is, it's like it's good for the economy, which means people will spend. But what it's not good for, in my opinion, is the fact that the market wants cheaper money. The only way to get cheaper money is a weaker economy. The only way to get a weaker economy is a through line with data. Um, Data points like this, in my opinion, throw off the concept of rate decreases. And we have to
Correct.
play this pendulum, right? Because it's all a pendulum swinging. The
Right.
pace of the pendulum just depends. It's like, so we've been looking for them to stop raising rates for a long time. They won't even acknowledge the fact that they're done raising rates. So
And I don't think they're gonna say that in the next meeting either.
I think that what they'll say is that we have reached a restrictive. I think the consensus will be that they have met or reached restrictive policy. Like if we're playing gun to head, I would say that would be the conversation on the other side, that they would say that we have entered a restrictive, whatchamacallit.
And that's been the sentiment from a couple of the speakers, right? Like, yeah,
Mhm,
we gotta let this work it out for a little
mhm,
bit longer. Whereas, and just wordsmithing, right? Few
mhm.
of them, hey, if the data isn't good, we may raise.
Which
Uh,
the data has been really, really great for kind of, it's like if they so chose at this meeting, if they really wanted to set fire to the Santa Claus rally to the upside, they could be like, literally everything that we've done for the last couple of years is playing out to perfection. We are threading the needle like no other. This is the greatest comeback in of all time by any Federal Reserve, right?
oh
They
yeah.
could do that, and they
Hmm.
could have data sitting there backing their words. Be like, yeah, no, you brought down inflation while maintaining, employment.
Yep.
Whoa, dude, that's
And a
amazing.
strong stock market and everything to go
Hmm.
with it.
Yeah,
It's like the perfect scenario for JPOW, right?
and in a lot of ways, if they're able to get some real activity generated, it could be a good scenario for an election cycle.
Oh yes. I mean, this is all for that, right?
Hmm.
Because especially Yellen coming out, people should eat their words because we're gonna have a soft landing. There will be no recession. Everything's hunky dory.
But it's like, how do you continue to look at anything but the potential of a soft landing with data continuing to print the way it is?
By fudging the numbers.
Well, no, well, if you're completely bearish and looking at it, how do you how do you reconcile data at this point? I don't know that there's a case that you can unless you start getting into the bond market and yields and all that kind of stuff, which I don't have a great understanding of, but I do have a pretty good idea of a trade when I see a trade being put on. And I
Uh,
think
uh,
I'll go ahead.
yeah, the bear case is harder to make. That looking at what we have, right? The data if you go back and keep looking at the data and the market reaction, there's like 10 points of data that come out. Which one is going to be used to crush the bear?
Right. Or which
And
one is gonna are they gonna use to stomp out the dreams of the bull? It's like that's kind of what the market is on a daily basis, right?
yeah, that's a daily basis thing.
Uh,
Bear case becomes harder at this point if you look at the data and next week they say, okay, our policy is working. We're just gonna wait here for a little bit.
mhm.
Um, I mean, I'm pretty close, like 100%. There's no cut coming.
Yeah,
You know,
there's no way that you
yeah,
can't cut with the data coming in the way that it is.
right.
Just like you
And
can't raise with the data coming in the way that it is.
yeah, so you just
Like,
let it work out because this goes to the narrative. Hey, it's working. We're gonna let it work it out. We're gonna see till next meeting. And in the last, I think the 3-4 months, that has been the shift in the narrative, right?
mhm,
We're gonna do this month to month, and we're gonna use the data, and we'll decide a couple of days before the meeting or at the meeting. That's it.
that's it. And so we have a market in through here that is desperate for cheaper money, like desperate. They want cheap money. Um, but there's just a really really fine line as far as sometimes you got to be careful what you ask for.
Yeah.
And I think that's where we're starting to get it. If policy remains to be too restrictive over an extended period of time, obviously unemployment won't look like this. Obviously, a lot of things won't look like this, other than maybe washing machines mean about 30% cheaper than what they are now.
I don't think they get cheaper, especially when Honeywell bought a carrier machine and things like that. So that stuff is gonna get more expensive.
Yeah, yeah, no, you're right.
Consolidation.
Yeah, which literally in a high rate environment, you're leaving businesses really no other choice either
Yeah, either
to
to get bought out
yeah,
or close shop.
yeah, which is ultimately this type of policy, creates more of the have and have nots. That's just the way it is. So if we, I think in working through all of this, so we've had a nice little broad conversation. Thank you, Sonny, for that. Now we can get into some of the the levels and the concepts that kind of are important to the intraday trading. And I think that you can make a case that we're kind of in this little zone here that I think is make or break after defending, and we'll talk about the ES6 specifically, 45, 55 over and over and over again, and even a dip down this morning into 45, 60 and a bounce. That zone is protected until it's not.
Yes, that was a good dip. Bought out immediately, and we bounced back to yesterday's levels.
So then we
Uh,
can go back and we can look at, okay, so what created that dip? So we had the dollar basically, surge and catch fire, and while and there's divergence taking place right now within the market, to where we have basically the dollar at the midpoint of its explosion, and we're right back to where we were essentially, give or take a couple of nickels, pre-data on the ES, right back to where we were, like
mhm.
nothing happened. Um, I think it's something that we really have to look at from the standpoint to where why did the dollar elevate so quickly and so harshly off of that bottom? And if you want to be that much more of a, kind of looker, if you will, of the dollar and how is impacting equities, dollar in this zone where it came up and touched this morning, it should in fact be pulling back substantially, especially when you have data that is coming out that is not necessarily lending towards any more rate increases. And at this point, the data, at least from a job standpoint, you kind of got to look at it as far as being this is about as good as it freaking gets.
Yeah. No, I'm looking at the dollar. I mean, that definitely was a interesting spike, and it's sort of getting up there. This was a point of resistance a couple of days ago. Was it
Hmm.
yesterday? Yeah.
Yeah.
Yeah, this was a point of resistance where it sank after that later in the afternoon. Um, Going above this level, you know, if it pushes higher, I'll be a little concerned here.
Yeah, no, I certainly agree. I definitely agree. Now we do have more data coming out at the top of the hour. We get I think Michigan expectation sentiment, all that kind of stuff.
Yeah.
Sometimes it's a mover, sometimes it's not. Um, there's additional landmines hanging out there. It would not surprise me at all from a retrace standpoint, with all this being said and all this conversation being had, that we don't play butt games to have the dollar retrace its pop and have us retrace some of this to the downside, and to open into that 10 o'clock period, and then we bounce from there. This area, on the ES, wouldn't surprise me once again if from here we come in and we dip into that 45, 55, defend it again, and we rally up through the rest of the day. It's hard for me coming into open to want to try to buy here, and it's difficult for me to want to short right in through here. The one thing I'll say is a little bit interesting. If you go and you look at and I'll talk about the NQ for a second, this area down around 1570, 1560, 1570, there's a volume imbalance sitting down there that we actually came down to the tick and we wicked it and we bounced from there. We wicked the top of that volume imbalance. And that could additionally be, more of a target down and through there. And we're kind of selling down a little bit. Look, the game plan for today is to expect just dumb shit. I think that's the best way to look at it. Flow out the next week is extremely bullish. And even on red candles yesterday, you could see that they were buying, 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 buying. Even on red candles, I think we get a little bit more of that today. I think we get some red candles and we get some jerk backs to where ultimately we come back to this zone, maybe close a little bit above it. But it seems like in a lot of ways, we will get a retracement back on the dollar to the upside. We'll get a retracement on the market back down into this area to where they snap back, just to test it to make sure that buyers are still there. Or if you want to look at it from a different standpoint, you can look at it, well, oh, they want to stomp out, whoever got long there, they want to go ahead and take their stops. Two different
Yep.
ways of looking at it, same concept. Either buyers are going to defend the level or they're not.
Yeah, and
right?
just to clarify, Health is looking at the December contract and not the rolled over. So TradingView rolled over the contract yesterday.
Did they? Okay, let's
Yeah.
see. Do I have a new contract to play? Maybe the March contract. Yeah, I'll go ahead and look through it. So yeah, that's kind of what I'm looking at for the day. Sonny, you got news for us?
Uh, Very light on the news. The TSM put out their numbers, monthly numbers. Their sales were down 15%, 7.5% year over year. Microsoft partnership with AI is being looked at by UK because they're buddies with the FTC here. In the US, they're going to look at Microsoft and their game. Who are they buying? EA or something, or ATVI? Yeah. And in the UK, they're looking at the Microsoft and OpenAI partnership. Rivian reportedly laid off a bunch of people from the battery development team. And Lulu had their ER yesterday. They had good numbers, but they guided down. They missed their Q4 guidance. So it took a nice little dip. I haven't looked at it if it recovered. AVGO also had the ER, took a dip, recovered it, and I think it made a nice recovery. China put out some news that they're going to step up the fiscal support to strengthen economic recovery going forward. They've been talking about it for a year, hasn't helped yet. So, not sure what's going to do now. They also have that, the rumor or the news pieces that keep coming out about this new virus or how the COVID tracking app has been activated and people have been told to stay home or wear masks when they're going out, things like that. Um, Nothing verified, but it's been making the news cycle. And EU is considering restarting their World Trade Organization case against US over the steel tariffs. So you got to look at X and a couple of other triggers that do steel, how that's going to affect them. Other than that, it was just very light. I think
Very
all
light, yeah.
eyes were on this data that we just had come out 30 minutes ago.
And again, it's like you can just imagine with the data, it's like you have imagine a room full of people split 50-50. It's like, wow, this is amazing. And be like, yeah, but we get no free money. So now what?
Yeah.
It's like that's literally the conversation. It's like,
Yeah.
wow,
And
it's
I think it'll be interesting to watch banking stocks based on this.
mhm.
You know, they've been having a nice run the last few days. This definitely would be interesting data for them.
Yeah, I think that's a good point. And it's like, look, we continue to get this push higher in the dollar, and while we've dipped a little bit, this is a good little consolidation in through here. It's like SPY
Yeah.
holding 377, Q holding VWAP. It's like for the moment, it's like okay, cool, cool.
Yeah. Yield spiked up, but pretty much came down to where they were before. Definitely keep an eye on that.
Yeah. All right, man. You got anything
Mm.
else? I can't believe we got no stocks. We got no Bender. What the
No,
hell?
stocks decided to sleep in. Mm.
Didn't even
It's
get a
like his
note.
recovery weekend.
Oh, all right. Well,
He's in the band and all, so you gotta let the artist rest.
yeah. All right. So flow that I'm looking out for, they were slapping those 4700s for this week or for next week pretty hard. I want to see if they're peeling off of those or they're dabbing back into them. Apple flow, it's like, are they coming in? Are they hitting 185 and 190 puts for next week? Or are they, juicing upside, reaching for that 197.50, 200? It's like that is going to be, I think, in a lot of ways, a tell of the tape. Apple has, believe it or not, a pretty bullish setup to my eye, depending on your time frame for a push to the upside. Where it can tap out, I have no idea, but it looks more bullish than not.
Hmm.
And even with this dip down, this you just call it a liquidation break, even though I think we will retrace a good amount of it at some time in the first 30 minutes of the day, or maybe they use a data point. I'm not sure. That's what I'm going to be waiting for. There will be, I believe, glorious opportunity to pound the upside because you really can't look at this from the standpoint, again, in my opinion, as a reason to sell shit with a strong
Yeah.
with
I mean,
it's like what is the backbone of the US economy? Any idiot can answer this. That would be the consumer. That's because we're a consumption economy. We're a consumer economy. So if the consumer has jobs, that means that they're going to consume,
Keep spending.
right?
Yeah.
And anything that inhibits them from existing with the labor market being what it is right now is manufactured chaos from the Fed, which they won't do going into an election cycle. I just don't know how there's any other way to look at it. Now, last thing I'll say, Sonny, does the market like to make me look dumb as fuck?
Yeah.
Like just dumb. Like just, man, Hells is the dumbest dude that's ever
It's been
walked.
liking to. It's been lately. It's been frustrating you.
So you know what's been frustrating me? How slow the market has been. It's like if
Yep.
we gonna go, let's go. We gonna dump, let's dump. It's like all this like wibble wobble, wibble wobble. Well, maybe we'll throw a green candle up just to throw a red candle down. It's like all that. It's like, come on, dude. This is just aggravating, aggravating.
Yeah. That wick yesterday at the 45.90 area, that was very interesting. Just
Hmm.
wicked and
It's like
never
again,
recovered from it.
and never recovered.
Yeah.
And what are we doing? And even in the last minute of the day into close, you had a 25-point dump on the NQ, and it's just like, well, what happened? Nothing. What happened? Well, they just came and bought it right back up as soon as it opened, and then sold it back down afterwards. It's like this churning, if you will, this slow. I think I called it yesterday. Rock the baby appears to be a thing.
Yeah. So, I mean, today on ES, like 45.80 to 85 is the area of interest. We need to be in that. Consolidate maybe above 45.85 to push higher. If we consolidate lower, I think, we go 45.68, 65.
Hmm.
Uh, Lose that, you're looking at the 55 test again.
Yeah.
Um,
Which,
so,
because I'm not in anything right now, I would really prefer that to be the case. My preference would be let's go get that 55 again, or even 60 again. It's like, fuck it, I'll even take 78. Give me 78 again, and then let's go play ball.
yeah. But 80 is holding so far. So we'll see what they do in 15 minutes.
Yeah.
And
All
again,
right.
like you said, we have data top of the hour.
Days how they are. Sunny, thank you again, but dollar continues to retrace, and we're holding a zone.
Thanks, brother.
Goofy, super goofy. Thanks again. We'll see you guys soon.
All right, bye.